there in TV land. Welcome back to another exciting continuing episode of AGI, Anthony and Greg on Intelligence. I'm Anthony Maggio, and with me is Greg, the data center expert, Prost.
Guess what we're starting with?
No idea.
Definitely not an expert. But yeah, let's talk about data centers.
So kicking this off, recent headlines, it's been ongoing, I don't think to a surprise of anybody, that the data centers just are relentless. It is every news clip you see, every local municipal council meeting, board meeting, it's all about data centers. We want more of them, not here, want them over here, don't want them over here. What is going on? What's kind of like, why is this even happen? Why is this a topic?
You know that. It's all about speed, right? About speed and being the first to get that speed, right? And so it's definitely, we talked in the first half here about how people have assumed that the abilities will slow down at some point in time here, that it's going to hit a threshold. LLMs, large language models, ChatGPT, they're going to hit a threshold where they just can't help you anymore because it's just picking a next word, right? And it just, every day that goes by, they continue to get better. And we just talked about agents, and they just keep making these leaps like everybody expected them to at the beginning, that we're talking about being on this hockey stick. And the reason that is happening is because computing power continues to increase. And until that stops, or until it's proven that just pumping more energy and power at it isn't helping anything, we're going to keep moving in that direction. And since we've gotten to this point, we're that much closer to that, it's teaching itself and it's making itself faster, and we're right there. They are all putting their pedal to the metal, right? They're pumping this out as fast as they can because they're trying to be first. And there's no doubt that there's certain companies that continue to win this a little bit. ChatGPT and Gemini and Claude seem to be coming out ahead of the Amazons and Metas and whoever else in the world. Even the Chinese are just slightly behind, and maybe they have a little bit better process there. I don't think it's just speed. I don't think they have more speed than the rest of the players necessarily. And so maybe they've done better massaging, but all of them are really close to one another and kind of bunched up there. So they know that if the other guy's increasing power and chips, that they got to do the same thing. So
because there's not an option.
Right.
I mean, because everybody, you hit a point where everybody's kind of in the same area, and you're looking for a way that, how do you get ahead?
Or just survive.
Or even, just surviving. If you're taking Meta's approach, I'm getting too far behind, so I'm going to buy them,
yes.
Right? So they bought Manus. We talked about that a few episodes ago. Now you have Apple, like let me dust the cobwebs off here of the Apple conversation, who has been like completely oblivious in this AI world for whatever reason, who now decides that we're going to look at partnering with Google and buying this computing space and equivalency for Google Gemini to run Siri.
Yep. And using their systems.
The two competitors. What is that about?
Again, it's, are they going to put their money into building a 10th system right next to everybody else's? I think they've made a decision to not get involved there. And Apple's done that forever, right? They're about the product itself, the phone, and that keeping it self-contained on that phone, that everything that you're doing and protecting it. And they've done a great job of it that way. And I think they're kind of waiting to be the one to provide that next wearable or whatever it is,
yeah.
I think. But, yeah, I think most people think, what are you thinking here? How can you not have a better Siri out there, at least at a minimum? But going back to the power centers. So, yep, you need power. You need data, you need chips, and so we all sort of understand that. We're keeping chips away from people, and you got to get in line. And so Google makes their own chips, and you got a lot of different things. So even Elon Musk talking about putting the data centers in space and using solar power, and just, it's just that much more efficient, and you can pump it out more. So at the same time where you have these AI agents and AI abilities hitting, 100% of the smartest human beings out there and just slightly moving ahead potentially in some of these areas. So you start moving down that path, and I just shake my head that, the people that are spending all this money to build out these infrastructure programs, to build out an AI that's going to change everything, should also understand that it's going to change how the data centers are built, how we get energy, how chips are made, and whether or not we're using silicon, to start with. And we were having a little conversation about how, the speeds are getting to a point where it's just physically impossible to speed the chips up because you can't get any smaller size. They're at micron levels, and you start getting quantum physics involved and that kind of thing. It's a problem. But they come up with layering systems and 4D and just some crazy things that they've gotten around it. And every time somebody says, it's not going to double in a couple of years, it just keeps doing it. And I would think that AI, if that's just human beings coming up with that up to this point, AI is going to come up with a much better solution, and it might be something completely different than what NVIDIA does and AMD and all these companies do, and come at it a completely different way, let alone the energy part, that maybe there's a cheaper source of energy or a way to come about this a lot cheaper. So, I can see us looking years from now and thinking, remember those giant data centers that were being built all over the place that are just sitting there not doing anything? Ultimately. But in the meantime, they almost feel like they have to. And I liken it back to, the 2000s when before '08, when banks were lending money left and right and 0% down, and you didn't even have to have a job. And people after the fact said, why did this happen? They were so smart ahead of time. All those years they managed money or managed their business this way. Why would they start lending differently at this point? Well, the reason is because everybody was doing it. And if you didn't, and you're a lender and you don't lend, you're going to go out of business, and your shareholders. And so it's the same kind of thing. Why are they all building the same system? And they all think they got to be first. And if they don't do it, they're going to be out of business. So amazing.
And
the money is huge, right? Dollars are just gigungous.
Oh, I often wonder in this because, okay, so you have the stock market, and so there's money that's invested in the companies for various things. I'm gonna put money in, and I think that Google's doing good, so let's pretend I'm gonna say I like Google, so I'm gonna buy some Google stock. And you look and you see they're making money, but they're dropping capital expenditures on these things. Where does this money come from, right? $200 billion in less than 6 months. And that's just one company. I don't know how much money is in circulation, how much there is, but you got $200 billion here, $150 billion here at another company, $300 billion on another company. I'm like, where's all this money come from?
And it's not all being counted. I mean, it's trillions. If you look globally, it's just trillions of dollars. So initially, what propped this economy up for the last couple of years has been, one of the things has been all this money on the sidelines. So Google had a war chest. They had hundreds of billions of dollars sitting there, mostly in cash and bonds, just safe, trying to figure out what to buy or to do with it. Well, all that money got pumped into the system. So all these companies that had hundreds of billions of dollars sitting on the sidelines, they pushed them into the economy. That helps GDP. That's quite a growth engine there. They're all out of money now. Now, somebody like Google, look, I don't even know what the number is, but I think it's about $100 billion they make a year in excess cash, right? They're still just massively profitable.
Oh, yeah.
As is Amazon. And these companies are massive. So they are using some of their operating funds instead of hoarding it. They are using it, or even buying back shares. They are using. So it's different than a lot of other time frames where companies just went whole hog and just borrowed a lot of money. But they are starting to borrow money now.
The war chests are gone.
The war chests are gone.
Drying up.
And the bond market's allowing it, right? That's this nice, high-quality companies, ship them in. So
Google's never going to go under.
Yeah, exactly. So this is simple. and speaking of that, I've been on these panels, and I sit on one, and it's a pension board thing, and I have an equity guy with me and a balanced manager, and I started from the beginning like, hey, Google's in big trouble here. I don't understand why people don't see this. They make a lot of money off of search. You're not going to search. You're not going to go to a search bar anymore. You're just going to ask AI. And I know people still go to that search bar, but that's where they make all that money off the ads. They know who you are,
Yes.
all that stuff, right?
Yes.
And man, they're in big trouble. The stock's at record prices here. If I had shorted the stock back then, I would have gotten crushed here. So it's ultimately coming to some of these guys. I just don't know exactly how it's going to work.
But that's the thing that I think's that this is what being the novice person I am in stock market stuff, where I look at these things and it's almost like, what's the new rule book, right? So you end up with okay, anybody that has a retirement account, 401k, whatever it is, you have the mandatory annual meetings that you only ever see the person once a year because they have to check a box somewhere with the SEC probably or something. So, they hound you, you sit down, you don't really know what the point of this meeting is. You have money invested in stuff. Yes. You like it? I guess. Sure. It's some mutual funds or target date for your retirement funds or whatever BS it is. But I asked my guy this last time, I'm like, he was showing me some different market things. And he's like, yeah, this one, has like an annual return, roughly about 10 to 15% over the last 10 years. And I said, I go, what difference does that make anymore? And he said, well, what do you mean? I go, well, the biggest disruptor is changes in, let's say, technology in this case, new technologies. We have AI out there now. The whole fundamentals of how any company made money or any stocks made money over the years up until that point is, and I'm just going to go the extreme, completely irrelevant, because the rules that the game was played under back when it was earning 10% a year or whatever, none of those rules are the same anymore. And none of the advisors that I've talked to, they don't have any answers for what you do about it, and I get they're just representatives. I don't actually know the point of the generic ones you get out of some of these companies. Like, what do you, I don't know what you even do. I really have no idea. You take 75 basis points out of my portfolio or something. I really don't know what you're doing because okay, I'm just going to go to the extreme on that.
No, that's it. Hey, talk about AI taking over a field, right? Yes, no doubt about it. The fees
they're not buying it. They're not sitting on the exchange trading stuff. You're just, you do once a year meetings, I guess.
Part of that is to helping you make sure you don't do anything stupid. So,
well, that's important. I would do that.
There is. They are trying to, put the level of safety at a certain level. Hey, point to you as far as looking backwards, and if that's what we're extrapolating this forward in this world, no question about it. I'm with you there. But they're getting paid to make sure you don't do anything stupid, or that you're not getting ripped off by somebody trying to give you information that or you're buying something with too high of a fee or anything like that. But AI can help you with all this now, no question about it.
And that's the thing, right?
Yes.
You look at all these, and this is what I like. Okay, start off with the data centers. We have all this massive investment. The only thing I get asked this, not every conference, but every other one at least. You're like, oh, the AI bubble, right? Oh, the big bubble's coming. There's all this overinvestment. And they start quoting things from, look what happened. I don't understand the correlation is not causation or whatever the wording is for that, where they're like, oh, look at the housing crisis. I'm like, yeah. And they're like, well, AI is going to do the same thing. I'm like, what did the housing? I don't even understand what you're saying. Like,
right.
It doesn't even make any sense.
Not related at all.
No. And so I'm like, just because it's a bubble, you hear bubble. So it was like housing bubble, AI bubble. They're all bubbles, I guess. I don't know. But you look at it, and I'm like, there's no way to say that anything that anyone is doing, there's no historical pattern that you can use to say whether or not it's over or under. It could be still under, you could say.
I mean, there are valuation numbers and that kind of thing, right? And extrapolating forward from this point forward.
That's the important part.
Yep.
It's got to be forward-looking. All
Yes.
this historical, they made money every year, doesn't mean anything anymore.
No, I mean, when a market gets into a bubble, they're not looking backwards anymore. It's looking forward, right? It's extrapolating out. And, hey, I made this much. They're going to make that much more, and they're going to continue to make that much more going forward, right? So that's...
But if they're using metrics based on history or trends over the last 50 years, I think that's where it gets skewed, right? They're like, it's got to have a correction every so often, and it's got to do this every so often. I don't know that's true.
Sure, no question about that. Yep, flipping it on its edge is saying, hey, it's not looking backwards and saying the stock's going to go up. It's looking backwards and saying everything has to correct.
There.
No doubt. I think any long-term investor that's, we haven't had any real bubbles here in a while, but if you've been around for 30 plus years, you've been through a few, and they have a feel to them, like a euphoria, like, the cab driver giving you stock tips, or, they find out you're in the business and they want to, tell you about how smart they are, right? Oh yeah, I do this and I've done that, and NVIDIA's this and I've done this and I'm so smart, right? That's what starts bubbles, right? Everybody starts thinking that, and I'll get out. Oh, I know it's overdone, but I'll get out before everybody else does. Crypto, that's the big comment that everybody makes. It might be overdone, but I'm going to ride it till, I'm okay with it. So, bubbles have a way of just, mentally getting used to it and looking backwards and saying, I'm used to a 10 to 15% return instead of an 8% return, which is what normally stocks would return over a 100-year time frame. Bonds are around 5. Stocks are at 8. When you have people saying, well, if I get anything less than 15 or 12, I got a problem here, and thinking this is easy, or that's, how the world works. And because you had these top 7 stocks around, that if you owned an index, it dominated the index, and the index is up because of these top 7 stocks.
Like NVIDIA.
Yes.
Right?
Yeah.
Aren't they like the majority of the S&P 500? Well,
yeah,
you know what I mean.
Google and Meta and all those guys, right?
Yeah.
Combined, right? And it's, I forget the statistics, but they're a third of the
they're
market. Like it's just crazy, right? So if you don't own, if you were just stock picking, and you're like, I'm just going to stay away from those. I got thousands of other stocks to pick. You're way below the index. You've returned. Are you dumber for doing that? You missed out on this. And I get people talking to me all the time. You're an investor and you're into AI. Oh my gosh, you must be a billionaire. You must, no, I'm way too smart for that, right?
Well, a helicopter did drop you off here today. So.
Well, don't tell everybody. But yeah, I keep looking too far into the future and thinking, no, this isn't going to work here. I don't think about the stupid people. Initially we're saying, hey, they're going to make $1 billion in this. Look at what they're doing. It's like, yeah, but that guy does it, that guy does it, that guy does it, that guy does it. How do you think this person's going to make $1 billion? You better be sure they're going to pick their AI over the other ones, because once they pick one, probably not going to pick the others. So it feels bubble-ish that way to me, that I don't think people are understanding that, hey, the ability of AI getting better is going to make it even worse for these, because it's going to figure out ways to do things cheaper or differently, and it's going to make things more obsolete. And so, and again, you're talking about stocks. I'm a bond guy. The stock market, you're buying into the company, so you're kind of buying the story. You're hoping, I think they're good at this. I think Google might win this. I do think Google at this point, but a year ago I didn't, but I think Google might win this. So if I'm a betting person, I'm going to buy Google stock instead. But I'm not buying the bonds. I'm not that positive they're going to win it. I'm not going to lend them money for 10 years and say, man, I hope you're around 10 years from now to pay me back, right? So that's a completely different world. And I don't think people really get that part of it, because bonds are so boring and stocks have been so strong that nobody thinks about their bond portion. And if anything, that like on the pension side, they're like, well, I just don't want simple bond. At least get me some junk bonds. Get me things that, this guy's earning, 10% over here. You're only earning 5%, that kind of thing. And so that mentality is out there, and that needs to be spanked. And that's a bubble. It's a bubble of euphoria that, hey, I can just throw money at GameStop and it's going to go up because this is fun. This is a game, right? And it's like, it's still a business. It still needs to make money. You can't go out and buy a gold mining company like they did years ago. It's just not. It's not the way the world works. Let alone crypto, and you just throw anything out called fart coin, and it just goes up like crazy. I mean, that's just, and it doesn't have anything attached to it. That is not normal people here, right? And so I've been talking about this for a couple of years, and people come up to me and like, so when are you going to change your tune? I'm like, no, it's just that much worse. It's not like all of a sudden it's been fixed, right? So
that's so funny.
So there are the market mentality is in a bubble. It really is. And crypto is just a perfect example. Even though it's crashed and corrected, gold being up so much. It's a monetary type of program. It's not really used for anything. It's just speculative, right? Mm-hmm. So it can go up a lot and come down a lot. No problem with that. Silver goes with it. Just how price of silver.
Oh, insane.
So silver is used in whatever. 60% of silver is used in things. And it's like disappeared. 100% of gold that was around 100 years ago is still around. You don't use it. It's not sitting in some landfill somewhere, right? The price of silver just comes crashing back down when people realize, oh, wait a minute, we actually need it to use products. If price gets too high, they're not going to use it anymore. It's not, it is a product here. And so I see things like that, and it gets so far out of whack. You're like, that is a bubble. That is speculative. There are enough people speculating on this, and they're enjoying the run. And there's a lot of smart people that know it's not real and getting out at the top and, jumping ship and crushing everybody else. That kind of stuff. The volatility that we've seen in the marketplace in individual names has been pretty aggressive here. So,
do you think there's anything in part of that due to the ease for I don't know what got deregulated or changed, but there's all these apps now. Like I can download, I think one's called like Robinhood or something. I don't know. There's like all these apps. Like I can start investing. It doesn't mean I know absolutely anything about what I'm doing. I can just start now. I don't have an adult, I guess, in this case, to tell me that you're doing stupid things and you probably should stop doing that.
Yep.
And I can go, well, I don't even know what short is, and I'm going to short something because it's an option that I can toggle and click on here. And I heard somebody made $1 bajillion doing this. And you can start, just doing random stuff.
Yes.
Is that, do you think, the widespread of novices getting into the market more directly is causing any of these sort of fluctuations with it? Or is there
no question.
the amount of...
No question.
You think there is some, you can actually tell?
Big time. In fact, it started a few years back. GameStop's a perfect example of the meme stocks, right? And so there was only so much money in these individuals putting money into it, but the hedge funds started following along. So, hey, let's have some fun. These guys are all moving in this direction. I can follow Reddit posts, on games. Apes hold strong or whatever they used to say back then, and so they were all together, and so it'd start to move it, and then everybody jump on board and push it up, and then the professional guys would get out at the top and that kind of thing. The GameStop's worked out relatively well. So again, who's this old fart over here telling us what's going on? Fart coin, buy fart coin. All right. How's that going?
Getting in and out, being able to...
people. Yeah. So, yes, there's no doubt there's a lot of money that came off the sidelines. There's a lot of young people that are playing this market. We talked about sports gambling, same thing, right?
Actually, it's really, I think, how they're treating it.
Yes, it's become a gambling. And there's a bunch of articles on the gambling part of the markets. And again, so it doesn't work this way. It does not. And if you think you know more than everybody else, you're the sucker. You're the one who's going to have the problem. So... You need a catalyst. You need something to happen. And I think this agentic stuff that we've been talking about and software stocks, taking a little bit of a hiccup and people realizing, oh, man, okay, what's the next part? What's the next advancement by AI? And what swath of companies does that start to take out, next? And how is this going to work? So
do you think any issues, and so this is the segue, I wanted to talk about this, and I think this will be a good time for that. So when you look at companies, I haven't done enough in-depth research. You hear hearsay all the time about like pharmaceuticals, right? There's no money in the cures, right? You hear that a lot, like only if we keep people sick do they keep making money. All these companies have the cures for every single disease. They just don't want to release it because then they have no money. Okay, my tinfoil hat is here. But I want to talk, though, about something that just came out. This was 2 days ago. I want to read this for our listeners here. So this was this was on the 15th. So, 2 days. This was out of the University of California. Scientists have created now the most detailed maps yet of how genes control one another inside the brains of people with Alzheimer's disease. Utilizing a brand new, powerful AI-based system called Signet, the team uncovered cause and effect relationships between genes across 6 major brain cell types, revealing which genes are truly driving the harmful changes in Alzheimer's. The most dramatic disruptions were found in a type of neuron I can't pronounce, where thousands of genetic interactions appear to be extensively rewired as the disease progresses. So when we look at, and this is kind of where I'm talking, like, the stuff it just comes out of left field sometimes. Right? So you have the boiling pot and you get the little, I'm going to go back to the percolation. Now this little blob pops up where they just utilizing AI and these data centers. You need the whether you like them or not, in order for this stuff to run and come up with some of these nuances and discoveries and novel approaches, they're going to suck up a bunch of energy to do it. But you get these little, and this is just one example of many. This one just popped up literally a couple days ago. They just published this, where they're making these like significant advances on these things like Alzheimer's, which has been, I'm going to say, eluding the medical research community in the world for decades, have not been able to really figure out what is going on. And they thought it was the plaque, and then they realized that it's not the plaque, and then they thought it was this, and then, well, maybe it's not that. But now being able to plug in all this data of everything, I'm summarizing it that way, data of everything into these AI models, the AI models are able to start connecting dots that we haven't been able to see, because either one, it's too much for any one or group of people to put together coherently, the picture, but it doesn't have a limit. If you give it a large enough processing power, you give it its own data center for a day or an hour, or in this case, it probably took it 10 seconds, but you give it all of it, you let it be able to process everything instantly, and it can see every angle of all of the data of all these documents and case studies, and you end up with these just significant jumps in advancing the research and what it could mean. And that's where, you look at things like, well, what does that then mean for, we look at healthcare, right? Costs are always going up. Everything's so expensive. Drugs are always so expensive to buy. All the everything is expensive, right? But then, you counter that with if we figure it out, and I don't say if, when we figure this out, and I'm going to say the AI will figure it out. It will at some point. This is what I wholeheartedly believe. Wherever there's holes in data and where it just needs some more, I'm going to say it's going to tell us that. We need more data in this area. I have an idea, AI. I have an idea. We need more data here. Okay, so let's go do some more research here to get data to give the AI, and now all of a sudden it can go, that's what I thought. Here's where we need to go. And all of a sudden, you're going to see a headline with breakthrough. Alzheimer's we have now figured out all of the pieces of it, and we know now how to treat it, and we can fix it, and we can reverse it. One disease.
So this is already happening, right? So we've cured, 3% of all cancers out there, one treatment, and every day we're just getting a little closer. And that was maybe using a little bit of AI, but without AI, we're already moving in that direction. So CRISPR is a program where they can go in and they cut the genes and replace them in 2 different things that they're doing there. And that was X number of years ago. Somebody, a researcher was sitting in a conference and saw that they had come up with a way of doing this part of it, cutting things away, and he realized, oh, we have something that can go and grab it and replace it and move it this way and put the two together, and it's just exploded since then. It's just incredible. You're talking about if they can figure out the genes that are causing the problems, they can go in and cut them out and turn them around or turn them on and off and all that kind of stuff. I don't understand it completely, but that was already, that was just people just happened to be in this, at the right place, right time, saw that and said, hey, why don't we combine the two? AI is great at that, right? So just that's low-hanging fruit. Mm-hmm. And we haven't even quite gotten to AI dominating that yet. But then what happens when it just gets a little bit smarter, right? So yes, it's ultimately going to cure all cancer. I don't know how quickly it's happening, but that's the question. How quickly is it happening? Well, it's already started to happen. And now AI continues to get better, so it's probably going to speed that process up. In 10 years, are most of them probably going to be cured? I would say yes, because again, the processing speed just keeps just ramping up. Am I going to lend money to a pharmaceutical company for 10 years that does cancer and makes all this money and they're huge and they're AA rated? No. The market still is lending them money. At some point in time, it's going to click, right? You're going to get these rapid advancement and say, hey, the same thing they did use for Alzheimer's, they can figure out that worked. They're going to use the same process for this, and then everyone like, oh, wait a minute. That means this company's going to be in trouble. Oh, man, I should, And so I'm amazed that it's not being woken up a little bit earlier. But yes, the pharmaceuticals are great because it's going to happen. You just don't know, is it 100 years? Is it 2 years? There's something in between. And every time a little advancement shows up and novel ways of doing things, you're like, okay, AI is allowing them to do. They knew this probably was out there and they just couldn't do it. They didn't have the power to do it. It's a great example of it.
And I don't think it gets enough attention. I really don't. I mean, the things they're doing, they I don't know if this was in China, but they found that like Down syndrome, right? And you mentioned CRISPR, and they were like, well, if we do this process at a certain incubation period, we actually can cure and get rid of Down syndrome.
Yeah, in utero.
And and it's like, is anybody else reading this? This is a big deal. And that's another little percolation. And then you have the signet when Alzheimer's, little percolation, and pretty soon it's just going to be. Yeah. It wouldn't surprise me that the AI is going to analyze everything and go, this is what you need to do to fix it. And then now the research is going to be, how do we do that? Because we don't have the ability to do what it's telling us to do yet. Yeah. It's some novel technique. It's some nanotechnology that we're not there yet. We need a smaller scale, 100 times smaller than what we have to do it, and it can't do it yet. So now you end up with we know the solution, so now we need the AI to help us get to the solution.
Yeah, but that's what's great about AI, right? You tell it, hey, here's what I'm trying to do. What would be the best way to do this? And it says, hey, build a little submarine that flies around your blood system and monitors things. It would need to have this to have it, and it need to be this size. Like, okay, where are we on that? It says, well, you're here. You used to be here. We're here. I think in 80% of it, we can be here in a couple of years. But here are the two things that need to, be invented. You want me to start working on that? Sure. Yes.
We need more data centers.
Yes, yeah, right. But I think make me bigger.
I need more power.
I need to be smarter. But no, that's cool. And so people are starting to see that, this is actually going to happen.
Yes.
Now, it's not 100 years in the future. It's going to happen here possibly relatively quickly. Okay, now I need to start thinking that way. So that's my whole point about talking about bonds. If I'm lending money to somebody for 10 years, I'm not so sure most of you are going to be around anymore. So, going business by business, it's amazing how, you'll start out, and I'll go back and forth with the AI and say, this is a business that's going to be here forever. This. And I'm like, well, what if this is invented? And it comes back and goes, oh, that's a good idea. I didn't, that'd probably be tough, but of course it's possible because of this. So let's try and put a time frame on it, and that might come within 10 years. Like, okay, done. I don't. And with stocks, with bonds, they're all the same, right? It's not like I can have this one double and triple in price. So I don't care what I own. I want to grab some additional yield, but I don't have to own that company. I don't have to own that company because it's the best or whatever. It's not, doesn't work that way, right? So I'm more thinking I had to find the companies that I want and stay away from anything that's got any hair on it, unless it's paying me enough, and they're just not paying enough because they don't understand the hair.
Yes to that. And then just makes you wonder, on that note, why didn't I take the blue pill?
Yeah.
Little matrix in there for you. On that note, thank you for joining us once again. We appreciate your time as always, and stay tuned. We'll catch you on the next one.